All right. Self-employed borrowers, you asked, we answered. You want more options for getting a home loan rather than showing tax returns and pay stubs because you're self-employed. You've got a great business, great deposits going in your bank account every month that just doesn't all hit the bottom line on the tax return. You've got legitimate write-offs, whatever the case is. You spoke, we've listened, we've got more options for you. Bank statements, loans for you, the self-employed borrower. More details to follow. All right, Matt, the mortgage guy here, mortgage broker, and here to educate you, empower you through that education to make great decisions about home buying and real estate. So self-employed borrowers have been neglected. I understand. And I truly feel for self-employed borrowers being, entrepreneurial myself. I root for borrowers who go out there and start their own business. It's hard to get a loan. So the good news is in 2022, more and more lenders are coming out with programs because they understand the general conventional lending guidelines around self-employed borrowers has been tough, right? And some might say it hasn't been fair, right? So I'm going to tell you about the very latest in a number of programs that are coming to market, more programs I expect to follow, self-employed borrowers showing your bank statements in lieu of pay stubs or tax returns to qualify you for a loan. I'm just going to run over the basics. If you have any questions at all, please feel free to reach out. Go to greatmortgagebroker.com, fill out the form, let us know where you're at and how we can help nationwide. We're looking to help you out. So minimum 640 credit score. It's going to have a debt to income ratio max of 43%. You might ask, how do we figure out the debt to income ratio? We factor your income based on what you deposit in your bank account, right? So the deposits into your bank, we're going to have either 12 months or 24 months of bank statements, and that's how we get your income, right? Max of 90% loan to value, meaning you're going to have to put at least 10% down. I know a lot of programs in the non-QM space are going to require 20%, whether it's bank statement or whether it's debt service coverage ratio loan. This specific program, only 10% down minimum. Depending on your credit score, how much you have in reserves, and whether you have 12 months of bank statements to show or 24, your rate is going to vary. But just for example purposes, I priced one earlier with a 760 credit score and 20% down. You can still get rates in the fives. And anybody who's done any sort of non-QM loans knows and expects these rates are going to be higher, right? But they're not going to be incredibly higher. The conventional conforming stuff we know has already reached the mid fours, right? So expect it to be 1 to 2% higher in rate, depending again on credit score, down payment, whether you have 12 or 24 months of bank statements. That's going to make a difference as well. You've got to be self-employed. You've got to own at least 25% of the business. I'll put a list of all these different things in the description so you can check it later. But these are the basics of it. Up to $3 million loan amount. Above $1.5 million loan amount, we're going to require 2 appraisals. That's something to think about. It does require reserves, and reserves are just funds you have in a bank account, investment account, knowing that you've got some money set aside to draw on should things go sideways. And some details about those reserve requirements. This is your only property, 12 months is going to do it. If you got additional rental properties, they're going to ask for a few more months in reserves. It looks like 1 to 2 finance properties is going to be 2 additional months for each of those additional finance properties. If you've got over 2 finance properties, they're going to ask for like 9 months per property. And truth be told, you should want that for yourself, right? It doesn't have to be in cash. It can be in an investment account or whatnot. But if things go sideways, you don't want to own 9 properties and have no reserve funds on the sideline. Vacant home, capital expenditures, whatever the case may be, you want to have some money on the sideline. So people that shake their head at that, I tell them it's for your own benefit. It's to protect you. So going to need a CPA letter. And that's, a letter from accountant verifying that, one, this business that you run, your self-employed business, has been in business for 2 years and you've got at least 25% ownership in it. You can use multiple businesses. If you run 3 businesses, you've got 2 years in all of them, and you've got bank statements from one, 12 months here and 12 months over here, and you want to combine those, you can do that, right? So great program from everything I'm seeing. It's for purchase, it's for rate and term refi, it's for cash out. Not everybody is going to be able to fit in Fannie and Freddie's box to do conventional lending, right? Self-employed borrowers are a big part of the folks that I see just frustrated because they can't get conventional financing. So we've had bank statement loans for a while. We've had debt service coverage ratio loans for a while for self-employed borrowers. This is a huge lender that does massive volume, 200 billion a year, bringing all their technology, all their resources to be able to deliver a bank statement program that I promise you is going to be fast, efficient. And my hope is that these things aren't too hard to get from start to finish, right? Which I don't think they will be, based on the lender that I'm going to be able to broker these to. So if you have any questions at all about this, if you have any questions about any other loan program, me and my team are happy to help. We're literally standing by, waiting for you to fill out that form on greatmortgagebroker.com. Let us know where you're at, how we can help. One last thing I'll mention is that if you have credit issues, I've never done any affiliate type marketing before, but I ran across a company called Kickoff who has shown me exactly how they work to increase people's credit scores for $2 a month. If you're just getting started with your credit, you're trying to reestablish credit, having a clean payment history and having a low debt utilization are something that affects your credit score greatly. So they offer you a $500 line. You pay $2 per month. It shows the low debt utilization, and it also shows you a positive payment of $2 a month. You want to know why it's $2 a month? That's the minimum that the credit bureaus would accept to actually show that positive payment history. So really great company, a bunch of smart people over there. I'm more than happy to endorse that. I'll provide the link below. Go check it out. I mean, for $2 a month, what can you lose? And the upside is that you increase your credit score by 20, 40, 60 points, and you save 0.25% when you're borrowing $400,000 or $500,000, right? Which is going to be humongous, tens of thousands of dollars in interest savings over time. So check out that link below. Greatmortgagebroker.com is the link if you want to get started with me and my team. Please reach out. We're more than happy to help. We're trying to empower you through education to make smart decisions around all your real estate financing. Thanks for watching. And until next time, we gonna see.